Make sure you diversify your portfolio is one of the first things you'll hear when you're starting your investment journey. Whether that is from your favorite YouTuber or your family friend who studies finance at university. Ensuring you are diversifying your stock portfolio and not keeping all your eggs in one basket can be one of the smartest decisions you make to ensure your portfolio is prepared for the ups and downs of the market. But this narrative has been pushed too far. Is diversification in the stock market overrated? First, we must start with understanding what diversification is in terms of investing. Diversification is a risk management strategy that mixes a wide variety of investments within a portfolio. A diverse portfolio contains a mix of distinct asset types and investment vehicles in an attempt at limiting exposure to any single asset or risk. The rationale behind this technique is that a portfolio constructed of different kinds of assets will, on average, yield higher long-term returns and a lower risk of any individual holding or security. Portfolio holdings can be diversified, not just across asset classes, but also within classes by investing in foreign markets as well as domestic markets. The idea is that the positive performance of one area of a portfolio will outweigh the negatives in another. A diversified investment portfolio could include stocks, ETFs, real estate, bonds, angel investments, and cash, to name a few. You will see lots of information saying things such as, the older you get, the more you should put your capital into so-called safer investments, such as bonds. And when you are younger, put more money into individual stocks and more risky investments. But the truth is, no matter what your age is or your financial situation, you should be putting your money into whatever investment you believe is the best for yourself and for your portfolio's future. Whether that is a higher risk pick or a low risk hedge, do what you believe suits your risk tolerance. Now back to the original question at hand. Is diversification in the stock market overrated? A diversified portfolio should reduce the impact of market volatility. Since you are separated into several sectors, if one of yours is hit, your return shouldn't feel the wound as much. Another massive factor that has come into part in recent years is how top-heavy the stock market has become. Just take a quick look at the largest companies in the world. We will start with Buffett's own. In Apple, the stock is up 44% in the last year. Microsoft is up 58% in the last year. And Alphabet is up 66%. Try your best to pick and choose stocks and diversify your portfolio into a list of other companies that have outperformed these big names over the past year. You can't, and if you are the 1 in 1 million investor, I guarantee your picks did not come with the same level of stability and low risk that investing in these few market-dominant companies did. While smaller cap companies have been getting destroyed with constant sell-offs and threats, these small growth story companies, or even established companies, can simply not keep up with the top stocks. So why go through this effort when you could just pick up the top stocks, is the question. There are some massive names you would have heard of before that are not necessarily fans of diversification or having an overall diversified portfolio. Some of these include Warren Buffett, George Soros, William J. O'Neill, and Bernard Baruch. Warren Buffett is probably the most notorious for this, with one of Buffett's most iconic quotes being, "Diversification is a protection against ignorance." Comprising 49.1% of Berkshire Hathaway's portfolio, Apple represents Buffett's largest holding. Berkshire Hathaway owns approximately 1 billion shares in the tech giant, worth well over $109 billion at this time of recording. So Buffett does walk the walk when it comes to his comments on diversification. If you want to diversify your portfolio, I advise looking for professional financial advice and understanding that you should take everything you hear and see on social media and from friends and family with a grain of salt, and do your own research and make your own decisions on your portfolio. The question of if diversification in investing is overrated and if diversification in the stock market is overrated are two very different questions, and I sometimes see people tie them into one, and this is very wrong. I believe having diversification in your overall investment portfolio is crucial. As much as people will try to convince others and themselves that they can time the market and can tell when the next housing bubble will be, or when the next stock market crash will happen, the truth is, they can't. None of us can. So a diversified investment portfolio will help you shelter from if something does happen to one of your asset classes. But, in my opinion, diversification in the stock market can be overrated. I'm a firm believer in investing in the S&P, which itself is diversified across 500 companies, but I do not believe in individuals attempting to beat the market with 100% of their stock portfolio being a broad spread of their own picks. Yes, I believe you can beat the market over a short period in time, but these 60 individual stock portfolios just don't do it for me. When investing in a company, I believe you should have an understanding of the industry they operate in, and you should keep up to track and know how the company is progressing. Whether that is watching conference calls or checking on whether they've released their recent earnings, and staying on top of your investments. If you are overly diversified, it is going to be near impossible to continue this in the long run. So to answer the question, I personally believe over-diversification in the stock market is overrated. I would love to know your thoughts on if diversification in the stock market is overrated. If you have enjoyed this video, leave a like and subscribe to Business Ventures for more weekly economics and finance case studies and news and updates.